valuations, financials, and pitch decks. Again, the premise of this is what makes a startup investable. It's unique value proposition, it's attractive market size, it's the team that can execute, and that startup has to make money for investors. So on the value proposition, remember we talked about the pains and the gains. So again, the customer has a job that they need to do. They don't care about your product, they just care about their job and they want it done. You're either helping them do the job better, giving them more time, more profits, or you're eliminating the pains and the hassles of getting that job done. And once you hit that product market hit, it's easy to sell it. But if you can't hit it and the customer does not see how you fit into their life, it's an uphill battle. So articulating value proposition, if you want a recap of the formula, that's your elevator pitch, really. That's the foundation of the elevator pitch. So for a specific customer who is doing their job, you have to explain what it is. You offer a solution, explain your solution, and then explain it results in allowing them to do what. And part of it is eliminating some pain or giving them some gains. And then you finish it off by saying we can do it better than competition, and you tell investors why. So the size of the market has to be big enough for investors to be interested. Again, we covered addressable market, total addressable, serviceable addressable, and serviceable obtainable markets. All of them have to be big. The ones to focus on the most are SOM and SAM. So SOM is your beachhead. So unless you're able to articulate your beachhead, it's very hard for investors to just write a check, because they need to know whom are you going to go after first. Who's the low-hanging fruit? It'll be the most easier for you to reach and to sell to. And then SAM, and the size of that market is obviously important, but more important is the SAM, how much you can grow into. So how big is that segment that you can later on grow into? This is a simple sample pitch deck slide with financial projections. So we'll just kind of dive straight into it. You are articulating your revenue. It's usually 5-year projection. And for those who are not going into market right away, so let's say you need FDA approval, we're talking about 5-year projections starting when you are in business. If you're close to it, if you're close to approval, you may have the first year of just listing your expenses, and that's okay. Then you have 4 years where you're actually starting to generate revenue. Again, those numbers, depend on what makes sense for your particular startup based on your industry. There are times when you don't need to do it. For example, if you're in drug development, you can skip that. Investors are just going to look at the size of the market and the comparables for exits in your space. And that's how they will determine, because you will be exiting before you ever get into operations. So what do we need on the financial slide? First of all, we need to have assumptions, and they're not listed here because assumptions change. So, I guess I could have just a number that says assumptions. But the assumptions are, what is the revenue driven by? So let's say your revenue is driven by the number of sales to the hospitals. So how many sales do you need to close? So my assumption line would look something like number of hospitals. And then I'm listing 2021, I have 2 hospitals, 2022, I have 5, and so on. Now, based on that, as an investor, I'm looking at the revenue, and I know that you need to close 2 hospitals to get that much revenue. Without that context, it's really hard for investors to understand what we're looking at. Then cost of goods come into play if you have a product, right? How much it costs to manufacture, that's all variable cost, right? So if you're not selling, you're not manufacturing, that cost doesn't exist. Then you have your gross margin on that. Under expenses, you want to list categories that are really appropriate to you. So it can be research and development, it can be sales and marketing, it can be general and administrative. Those are the big buckets. If you are conducting clinical trials, have that as a separate line item. Sometimes you will have a number of full-time employees that can come into play again. And then you finish off with EBITDA. Again, you're not doing any interest, you're not doing taxes. It's just, this way investors can compare you to any other startups that are in different states. Let's say they have different state income. So this is a pure, apple to apple comparison. So this is all you need on the financial projections slide. Sometimes you would be advised to do graphics instead of the tables. Again, very subjective. Some investors like pure table, like you see here. Some just prefer a real easy slide to look at bars and graphs, like how the ramp up of your revenue and what it looks like. Any questions there? No questions. Anyone tried to do financial projections?
I use a simplified NPV model, and yeah, okay. It at least gives me some ranges. That's the other thing. What do you think about putting in ranges, kind of a optimistic, pessimistic, and realistic?
So that would come into due diligence. So when you're just purely pitching, I would suggest go with the middle scenario. And you can articulate, you can say it on the deck that I'm showing my best, not the best and not the worst. I'm showing most realistic scenario. And you can mention that, even in the worst case scenario, I'm still making, XYZ in the 5th year, right? Whatever the number looks, impressive. And you can say, but if we are really good, if we execute exactly how we plan it, our upside can be as much as, again, XYZ in year 5. I would also probably say what it depends on, right? So one way to do it is our most realistic projection is that by year 5, we'll have 20 hospitals. However, if we are slower, we may only get to 10, but even that will give us X number, X in revenue. And if we expand quicker, or we go into, we make a deal with a large chain that will give us access to a lot of hospitals right away, and they will scale up, then we can go as big as XYZ. Does that make sense? Or are you asking for also like ranges in pricing or ranges in cost of goods?
Yeah, I think that makes sense. And maybe tying in the other variables into that estimate, and just speaking to it on a high level rather than having a table with too many numbers.
Yeah, I mean, at the pitch level, you really are just flashing it, to be honest. And it's all during the Q&A. It's easier for you to go back to it when someone says, "Well, what are your margins?" And you can bring back the slide and you can show, "Well, okay, I have." And again, this is not realistic, right? I'm showing, 94% margin. That's just a sample. Again, your margins should actually improve over time, right? So here you say, well, it's 94% margin, it's just all across. So that's not, typical. Again, it's just plug in. You definitely want to have those slides in the appendix. If you're doing a pitch competition where there is no Q&A, that's the only time when you don't really care. It's all about the follow-up. In the due diligence, though, they will be looking at your Excel spreadsheets and all the assumptions. The most important part to articulate during the pitch is really the assumptions. And make sure that you don't just throw in random revenue, because again, like right now when I'm looking at it, like I really don't know. Is it realistic that you would achieve 28 million? What is it based on? But if I know that you only need to sell to 10 hospitals, for example, to achieve that, then I have a way to gauge how realistic that is. So John, when you did your projections, did you do them for yourself, or you started doing them for investor pitch as well?
It was for myself, but internally to rank projects.
And I would definitely advise, when you sit down, do financial projections, a lot of times, I get questions like, oh, what would you like to see? I'm like, well, there's nothing that I want to see. I really want to see, like, what do you want to see for you to go into this, venture? How big of a return are you expecting? Then, after that comes the investor, right? Is there still enough left for me? And if the numbers look good, they may look good, but they may not be investable. Right. So let's say I'm only seeing, you're 5 years in business and you're barely scratching maybe, 7 million in revenue. I may be concerned. Now you may be super, realistic, and you just don't want to overpromise. But again, I'm like, well, is there enough money left on the table? If you overproject, you start getting people to just discard the entire projection. So it has to be realistic, where you feel comfortable, it's worth your time because it's your life that you're investing in the startup, and then there's enough money left for the investor.
Okay,
any
that makes sense.
comments, questions, concerns?
As a rule of thumb, as you're talking about revenue, what's a good number to go public, yearly revenue?
So that completely depends on your industry, because you would be compared to something that's similar. And again, you're talking about the net revenue, you're talking about the EBITDA, probably more likely. It would really have to match the industry, because in software, for example, you would have a very different ramp up, different expenses. But then it sort of, runs by itself, because you don't have COGS, right? It's, you just sell, and the margins are high. So that's what I mean. Like, there's no way to say, well, what are you looking for? There's nothing that specifically is expected. It just has to be really matching your industry. Drugs are obviously, insane revenues, right? But there's also insane risk. So as the risk goes up, I want to see more revenue. As risk goes down, I might be okay with much lower revenue.
Okay, that makes sense. And if we just focus on medical device, any other comments there? Or maybe that's where the databases you referenced last time are useful.
Yep. So let's move on to the ask. So that's part of your pitch deck, is what are you asking? So once you covered your financials, you always want to list what investors put in. So maybe you have founders, family, friends. So I'm listing, 100K here, for example, right? That's what they put in. Seed round, sorry, is that, where's my, seed round is speed round, huh? Okay, that was meant to be seed round, not speed round. 500K, right? So you're raising 500K, you already raised 100K. If you have any grants, you also listed here. Sort of how much money you've accumulated up till today. And then you do the terms of the round. So if it's a seed round, it's usually a convertible note, and those are kind of like typical terms. 20% discount, 6% interest. Along with the ask, you have to articulate your use of funds, because the ask is meaningless unless I can understand how you're going to spend it and what are you going to achieve with that money. The normal breakdown, here you just see it listed. A lot of times we see pie charts. Pie charts are based on percentages, so it's a little easier because you can play in your Excel spreadsheet with numbers, and you can change them, and percentages just adjust. But basically what I'm looking is I'm just eyeballing on sales and marketing, okay, 250, R&D 150, general administrative 1. Okay, so I'm looking at like it's a good enough sales and marketing number, right? So I'm assuming that you're ready to you're spending enough to go to market. Investors don't like a lot of R&D spend because again, they hope you did some grants. Again, there's always an exception because if you are in developing a drug, you're kind of stuck. You're going to have a lot of R&D, but again, it has to match your industry, right? So valuation is another sort of component of all your sort of financial bucket. And valuation is sort of driven by future cash and risk. So it's not just based on your 5-year projection. I look at the EBITDA, I do multiple, and I say, well, great, that's how much money this company will make. The risk is part of it. Otherwise, I would be investing in brick and mortar existing business that's already generating revenue, because you're only projecting, you're hoping to achieve it, right? So yes, it is driven, the valuation of your company. You can just say I'm worth 5 million without backing it up. So you can use your financial projections as part of the validation, right? You say the justification. You're saying, it looks like very realistic. We're going to get 10 million in year 5. And you have to also de-risk it. So the risk has to be as low as possible for your valuation to go higher. And recently, valuations went through the roof. They're now adjusting very rapidly. So companies that were asking for 70 million valuations are now dropping down to 50, 40. Ones that were going for 10 million valuation, they're dropping down to 7 or 6. Again, the numbers are adjusting on the fly right now. It's very volatile. Again, as an investor, you always look at the fact that there's volatility in startups relative to the market. There's lack of liquidity. I'm stuck with a startup until it exits, basically. There's also a lot of times lack of professional management. So I'm writing a check to someone who may not have had other startups and exits. Sometimes it's actually, lack of entrepreneurship that I'm, as an investor, may be concerned about, and I see it as a risk. Those are the cases where you have a lot of corporate guys going into a startup, and they may not be able to weather the entrepreneurship journey, right? They may give up and just take another job. They don't have that entrepreneurship, in them, that DNA. And again, the lack of revenue predictability is the big one, right? You're promising something in those 5-year projections, but I have no idea. A good way to look at it, and I always kind of recommend that, when you need to either justify your valuation or you want to kind of see where you're at, is look. This is a risk factor summation method. Again, no one really, to be honest, uses a pure science. No one plugs in those numbers. Most investors done it long enough where they just eyeball it. But if you break it down and you have to justify it to them, or you're negotiating and you're trying to talk them out of lowering it too much, here's what they will be looking at, and here's how you can argue. So as a formula, and this is basically if you look at down below. So you use minus plus, -2 +2 range, and you assign, on this one, you assign 250K for each. This is totally arbitrary. You can decide to assign 300K, 400K, whatever that is, and you can play with the numbers in the range. But whatever you do, this is how you would assess it. So management risk. If I'm looking at a team that is inexperienced, I will definitely give it -2. So all of a sudden, my valuation, looking at those numbers, 250K per point, right? The valuation will drop down 500K. Let's say you suggested 10 million valuation. I'm going to start chipping away at it because I'm saying -2 on management, because there's high risk. Stage of the startup risk. How early are you? Where's the prototype? How long will it take? Legislation, regulatory risk, again with medical, that's an issue. Manufacturing risk. Have you had conversations with manufacturers? Is it, are there going to be supply chain issues? Have you actually modeled out everything? Have you talked to, where did you have your MVP done? Is it done one-off, or, someone developed it to the point where it's manufacturer friendly? Sales and marketing risk, that's probably the biggest one. How convinced am I that you will be able to sell, given the strategy you articulating? Funding risk is actually an important one. If I'm looking at how much you need now, I'm also looking at how much you will need down the road. And I want to know how much longer, because right now you may be raising 500K. But if you need another 2 million, then another 5, then another 10, then another 15, I'm going to get diluted. So again, I'm going to start bringing that valuation down. The other part is of the funding risk is I need to figure out who will be interested in funding you, because a lot of times, let's say you go to angels, your next step is perhaps going to VC firm. Well, are you going to be at the point where you would be attractive to them, or are you going to be stuck in the middle where you're not here, not there, and you will still have to then go back to the angels to raise maybe a bridge to Series A. So now I'm looking at, well, what milestone are you promising me to achieve? So that goes back to the use of funds, right? You said you need 500K, you will spend it on sales and marketing, R&D, administrative, and you will achieve this milestone. Well, I'm looking at this milestone and I'm projecting forward. I'm imagining you going in front of another angel group saying, here's what we've accomplished. We raised 500K. We got to this point. Now we're raising 2 million. Are they going to be impressed with that accomplishment? Is that a big enough milestone? Because if you're not accomplishing enough, your valuation has to go up, right? Next round, you're raising more. How will that play? Who would find it attractive? Moving down the line, competition risk, obviously always a problem, because I'm looking into how much effort will it take to replicate what you do. Here's where IP comes into play. Let's say I'm looking into what you've spent before. So let's go to that ask slide, and I'm looking at, okay, existing investors, founder, family, friends, 100K. And let's say you tell me, you've achieved that much with that money. Now, on one hand, I can be very impressed, right? And I can say, wow, you ran really lean. It's great. You've accomplished a lot. Let's just move you forward. On the flip side, I'm looking at it saying, okay, it only takes 100K. So does it mean that if I give 100K to a better team, they might be able to achieve where you are at now in the time that it took you? And let's say you told me it only took you half a year and 100K. If you have IP, I'm okay, because that IP prevents someone else from grabbing 100K from another investor, investing half a year and getting where you're at. But if the IP is not strong, or there's a lot of workarounds, all of a sudden I'm starting to get worried that someone else can get to where you are with just 100K in just 6 months. So again, that's your sort of competition risk. And again, looking at the space, there are a lot of spaces that are just too competitive, there are too many players, and I might be concerned that it's too noisy. Digital health is very noisy. All those patient platforms, patient engagement platforms, it's really hard to raise money in that space because of the competition. Everyone's fighting for the same hospitals, basically. So tech risk, because this is kind of obvious, tell me how far along are you? If you're not that far along, then there's that tech risk. So I'm using that -2 and I'm knocking down that evaluation. IP and litigation risk. So it's not just IP, it's also, do you have freedom to operate? Or what if someone just tries to block you? Number 10, that's the opposite, right? I'm looking at the potential lucrative exit. So if you told me that there are a lot of companies exiting at an early stage, preferably, right? So maybe just, first in human study and you can exit, I'm happy. And you show me comps saying that those exits are pretty lucrative. But if I'm struggling to figure out who would be your potential acquirer, or I'm looking at numbers that are just not very impressive. All those M&As were kind of low. That company went for, let's say, only 15 million. That's not impressive, right? We're not talking about a big exit. So this is a good chart to just go through, whether you're using it for valuation, justifying it, or simply looking at how attractive are you to the investor, because all that is going through their heads. And the more you can de-risk in your story too, I mean, obviously behind the scenes, you're de-risking like crazy, right? Like you're trying to set up your manufacturing, you're trying to, get further along to de-risk the tech. You're talking to the, salespeople, you're finding out how much it would take to bring it to market. But also de-risk your story. How you present it, how you pitch it makes all the difference in the world. Is how you phrase things. Do you mention things like you already talked to the sales team, and it will be independent sales team. Their percentage commission is XYZ. That makes me feel much more comfortable as an investor. And again, there's nothing that changed behind the scenes. You're just telling me about it. So now I'm looking at you much more favorably. Anything to make you look the more sort of later stage is also good. And again, that a lot of it is just based on the story, how you tell it, how you frame it. So now let's move on to the pitch decks. And again, I promised to go through sample decks. Just remember, again, full disclosure, there is no right way to do a pitch deck. Someone can show you another pitch deck and say they raised money with it. I've seen horrible pitch decks that people raised money with. Again, can you do it with a horrible deck? It's up to you. I don't like playing a lotto, but again, you could. There's no one formula, although we all use very similar formulas. So the templates that I'm showing you are pretty much standard, except maybe the order, but all the topics are what everyone wants to see. Now you have to tailor it to your audience. Again, are you talking to strategics? Are you talking to angels? Are they familiar with the space? Not familiar? But going, that just depends on how much data you need to give them. But it doesn't mean that that you have to be super technical when you present, because that never works. Even to expert investors who know the space, there's certain things that you just need to tell as a story to make it easy, so there are no questions in their mind, because you don't want to gamble. You don't want to assume that they know something and you forgot to mention, like, oh yeah, there's reimbursement, and you just assume that because they're in the space, they know that reimbursement is high. Well, it's up to you to actually say it, right? And again, the fourth one, just the financial slide. What as I mentioned, the number of years. Roughly you do 5 years, but when you start, you can start with year 1 of revenue, or you can start 1 year backing out of it, or you don't do financial projections because again, you're a drug company. So let's look at the entire sort of skeleton of the deck. So we covered all of those aspects, but now we're putting it all together. So your intro slide, that's where you have your logo, your elevator pitch goes over that one. Usually you would just have a tagline on the slide, and as a voiceover, you are saying, hello, I'm such and such, and you do your elevator pitch. We're a company that does this, we're solving this problem. You can also throw in whatever pieces of information you think are very impressive. So if your team is awesome and you all had 5 exits, I would say, start with that. We have a team that had, 5 exits in the space. We're now working on this problem. Here's what we do. Boom. Again, nice and short. The purpose is to let an investor put you in the correct bucket. You don't want to be too vague. It really is not the time to say we solve patients, problems. And what kind of problems? Or we help manage, quality for the hospitals. Again, a little too vague. Good, at least I know what bucket you're in, but the more concrete you can be, the better. If you're B2B, say it. If you're B2C, say it. So now we have our problem slide, right? We talked about that. Then you move on to the solution. What have you developed, and how different is it? Sometimes they can be 2 slides. If you have a lot of differentiation you want to talk about, create a separate slide for that. You basically telling, you use some data to prove that your solution works. So everything solution oriented is in that bucket. A lot of times it can be just 1 slide. But if you are let's say your medical device and you have to show data that proves that what you've invented actually works, do it as a separate slide. Once you covered the solution, 1 slide or 2, 3 slides, you're moving on to the market size. You're articulating the TAM, SAM, SOM. Again, we beat it to death. You know it. Move on to the team. The sequence is, again, it is sort of semi-optional, right? You can mix and match. You can move team all the way, even after the ask in some cases. So this is a little bit arbitrary. So in your team slide, we talked about that. Then you have your advisory board as well. Talk about your business model, how you make money, how you get reimbursed if you are in the healthcare space. Right? Talk about the competitive landscape and how you're differentiated from the competition. Then go to market strategy, how you're going to get to your beachhead, how you will potentially later expand to the SAM. You have your financials, you have your ask and terms, and you have your exit strategy. That's where you have the comps. What are companies exiting for in your space? I like to say, think about it as a real estate comps, right? Like you're selling a house. Tell an investor what a house is going in your neighborhood, right? In your industry, in your sector. So you basically want to say, look, even fixer-uppers are going for that much. And the mansions are going for that much. So the mid-range is this. So I'm, hopefully we will be, towards the higher end. But even if we end up being acquired as a fixer-upper, you can't lose, because even fixer-uppers are going for, quite a bit of money, and you want to give those comps. So before we move to the slides, slide samples, any questions there? Stop sharing so I can. No questions? All right, you guys want to look at the sample? Right, let me share the screen. Now, this is a real deck that was used at some point. None of it was prettied up afterwards to sort of fit what I tell you. So if something is missing, something is missing. If something is there that shouldn't be there, again, it's a real slide. So again, this is, does it tell me what I'm looking at, what bucket? Okay, regeneration from stem cells in your fat. Okay, got it. I can put you somewhere in my mind as far as the category. Now what we're looking at, that's your, so let me move the pictures, sorry, the bars are covering. There we go. So this is your problem slide, right? Now, sometimes you would just have problem as a title. Here you can have chronic conditions or crippling. That's good enough, but don't get too fancy. I want to make sure that I understand what I'm looking at. So chronic conditions are crippling. Gives the numbers, right? How big of a problem? Big. I get it. A lot depends on the voiceover, and I'm looking at the slide without having the benefit of the pitch, by the way. So this is very similar to what you guys will be experiencing when you're judged. So if I'm looking at the slide, I don't get to hear anything. I'm purely analyzing. So I'll be sort of externally thinking with you and telling you what I think. Okay, exploding potential of stem cells. What does it tell me? I get it. The market is growing, right? So I have some numbers here, 20% CAGR. Again, that's an old pitch deck. So they articulated that chronic conditions are crippling, and stem cell potential is growing. I'm guessing it's addressing stem cells. I mean, the stem cells are addressing chronic conditions, right? Now let's move forward. So now they're saying problem, stem cell sources. So this is a different kind of a problem. So if I go here, that's really an overarching problem, right? Now they're getting more specific. This one is almost setting the stage, right? Now, obviously they're in stem cell. So what is, stem cells are out there. What is the problem? Here they're clearly articulating what is it that customers are not happy with, right? Or why patients are not benefiting. So it's the stem cell sources that are a problem. Okay, I get it. As a judge, clear. Now they're telling me fat is a phenomenal source of stem cells. Okay, good. We're moving towards a solution. Now I probably would expect something a little more in detail about how they do it. Okay, they go back to the current state, right? So this is a little bit of, to me, when I'm analyzing it, I'm looking that this is more of a problem again, problem / setting the context. So it's slow, contamination, chemicals, complicated. So what they told me is, these guys, the sources are bad, right? Fat is good. However, there's still problem with it because current methods of getting stem cells out of it are still not adequate. So they're still getting to the final problem. This is slide number 6. Okay, this is finally they got to the solution. I think the narrative is fine. I'm not really complaining, even though normally I would expect solution much earlier than slide number 7. So harvesting device, okay, I get it. Disposable cartridge device. They tell me why it's again, it's differentiated. Now, do I match it to the problem, right? So, okay, so they're telling me, they're bragging that it's 30 times faster, twice as many cells, no chemicals, easy, clear, regulatory. Okay, let's go back to the current state that they complain about. Okay, it's slow and they're fast. Contamination, and I guess they are not contaminated, even though they don't say it, they just say no chemicals. Oh, this one says chemicals. There are non-chemicals. Complicated, they are easy. FDA, yes, again, here they say it's a problem, and they're telling me on the solution that they have a clear regulatory 510K. As a judge, I'm giving them high marks, because not only they articulated the problem, but their solution absolutely matches it, right? They didn't tell me that the problem is there's people are dying from chronic diseases, and then they moved immediately to this harvesting device, and they're telling me that's fast and it's no chemicals, because then like it doesn't match, right? In their case, the match is great, so they're getting high scores. Okay, now they're telling me that their process is IP protected. It's pending, okay, but I'm fine. They're telling me a little bit about how it works, because it's one thing to just show me the device, but now they're giving me a little bit more of a secret sauce, which is good. It creates mechanical pressure waves, specific energies. Again, it's just the right level of detail. As a non-expert, I would just assume that mechanical pressure waves, specific energies and frequencies to break up the tissue is what you kind of need. And maybe others struggled because they couldn't get to that specific pressure and specific frequencies. And now the stem cells can be deployed. Okay, so I'm giving them high marks on the IP. They told me what the solution is. They told me that it's protected. Now I would probably expect some data that that shows me that their solution actually works, and they have some proof of it. Okay, so that's their data slide, and that's exactly what they're doing. They're giving me some indication that they are 30 times faster and twice as many cells, and they're going against the gold standard. Again, great marks for them on that one. Consistency and flow. Okay, again, more data to basically de-risk that tech, right? Remember we talked on the risk analysis, risk summation factor, saying that the tech is a part of that risk. So they're de-risking it for me, right? They're giving me more data to make me feel comfortable that it's going to work. In fact, not sure that the slide does much for me. In the voiceover, that would probably make some sense, because if I am skeptical about stem cells, that's probably their time to dissuade me and basically tell me, no, it's not as risky as you think it is. Okay, more clinical evidence. They're giving me numbers of patients, benefits, cartilage regeneration. That's all great. In the written deck, that's probably the best way to go. In a verbal presentation, especially if you have only 10 minutes, let's say, there's no way you can cover that much. So you have to make your pick. Out of all the slides that we've been scrolling through that show data to make me feel comfortable that it works, I would pick some of them, but not others. This is a good one. This might be what I would go with. Cartilage. I might also pick something like this. So maybe those two slides, this and that in the verbal presentation. Does that make sense? Okay. So now we're moving more towards, I'm getting a sense that we're moving more towards the business model, right? So they're talking about stem cells in orthopedic clinics. Hopefully, if it was a verbal presentation, I'm already aware that they're going into orthopedic space. If it's a written deck, that's probably a surprise to me right now. And I'm sort of getting a little annoyed that they didn't tell me that they were going into orthopedics right away. That should have been part of the solution slide where they said targeting orthopedics. Okay. So now they're telling me about the razor blade model. So that's their business model slide, right? They're selling device, they're actually leasing device. The disposable are going for that much, and profitability is 84%. So I have to infer that they're selling to orthopedic clinics, right? So it's not articulated extremely well, but it's good enough. I'm getting that this is what it is. I would have liked to see some reimbursement there and justification for the pricing. Competition, again, it's really hard to do competition in the written deck. But what do you need here? What is the market asking for? So they told me the problem that it's slow, it doesn't yield a lot, it uses chemicals, it's complicated, right? Does that match? And contamination they mentioned in the problem, right? Everything matches. So they're going to get high scores for that one. Because if they told me that the problem is that it's slow and there's contamination, they told me that the solution is to be fast and no contamination. But then all of a sudden on the competition matrix, they started talking about the number of injections or the time to recovery. Then all of a sudden I'm not going to give them high scores because that doesn't make sense. Because if you're competing on speed, why are you comparing yourself on time to heal, right? So everything has to be lined up. You can't just make it up to fit your story. The entire story has to fit like a puzzle. This is a very good way to do it. You always want to have your company on the left because we all go left to right. I'm looking at what you compete on. I'm seeing how well you perform, and I'm kind of glancing that others are not getting as many check marks. Normally, the first one is what you're competing on the most. So be careful how you sort. Don't make this just random. And now I also know what you compete on, what is your core competency and why you will win against them, and how your salespeople will pitch when they walk into that waiting room and then they get the meeting. They're going to be telling that orthopedic group that, look, we can do it faster, we can yield more stem cells, we're enzyme free. I guess that's important, and we're easy to use and we're sterile, right? That should match that sales pitch ideally. So good marks on that. Go to market. Development phase, year 1 through 5. Okay, I'm getting since first they will do key opinion leaders validation. They will be getting some service revenue. Okay, that's relatively clear. They will get the approval, and then they will move into the affiliate clinics and selling through the trade shows. Okay. So that is pretty clear for me that they're getting, in the market, they're starting with service revenue, getting entrenched with key opinion leaders. There's a phase 2 to the go-to-market, and that is affiliate clinics. Then I'm seeing their growth phase, right? So I'm assuming they're moving into the SAM, or they're still just kind of covering the SOM, but gearing up to going towards SAM. And they're doing direct sales distributors. Okay, so very clear to me. Again, great marks on that one they would get. I know it's not your own sales force, it's distributors. It's very clear to me. And then scale, that is nice, but that's really kind of irrelevant. So international and horizontal markets, that's just teasing me. And I'm guessing that this is not part of the raise. But I'm not going to mark it down just because they mentioned it. Okay, a little late for my taste on the market opportunity. I would have liked to see that or to have seen it earlier. They're going for, let's see if they're giving me some. They're not giving me some on that one. Okay, so they're giving me the total market and the serviceable market. I would have preferred to see to have seen the SOM, right? Because they're saying it's orthopedic clinics. And here they're just going, okay, so 10,000 active clinics, 13 patients per month. They're giving me numbers. So it's a top-down, bottom-up approach to TAM-SAM SOM. So they're getting high marks on that one. I think the only thing I would say is, the 1.2 billion, I get it where you're growing, but I need to see the beachhead, and I don't know how much it is. So I would have to rely on financial projections to get that number. So let's see if they do it well. Okay, that's probably going to pass because they clearly, that's basically their SOM. Again, I would have just put it on the slide. Make it easy. Don't make it hard on yourself, or don't make it hard on the investor. Again, they went for a graph. Very good. They did revenue and they did EBITDA. So they basically, I can estimate how much they're spending, right? I don't need to see those numbers. What I don't know is how many clinics does it mean. So I'm going to mark down based on that. The assumptions are not clearly articulated. I really have no idea how many orthopedic clinics they need to have. Market validation. So this is your traction slide. Again, it's a little late for my taste. I would move it up, probably closer to where either solution or before go-to-market strategy. So they had 37 meetings, 34 committed pilots. That's impressive. So I would have it much higher up because the numbers, again, is very good. 92% conversion to pilots, so that they got the data presented very nicely. Converted customers. Okay. So now they're moving to management team. Again, I love this slide. They're going to get good marks for just, visually. I see the faces. It's not just text. Sometimes we do see text only, and it is, as humans, we don't respond to it as much. Okay, previously, I see companies, hire number 10, BS in Stanford. Okay, again, everything is relevant, right? So he was a chief marketing officer. I get it, and now he's going to be, their marketing guy. He raised 1.9 million. That's awesome. I know he had startup experience. Great. The operations guy. Okay, previously CEO at whatever company it is. I see that he'd done biz dev at another company, medical surface. Okay, okay, it matches, right? His background and whatever they brag about him matches what his title is. Advisors, again, very nicely broken up. This is marketing. This is all, yeah, Michael is marketing. I happen to know him. This is probably a little bit light because I know this is an accelerator. This one is. In a written deck, I don't have the luxury to ask the question. So I don't know how much of it is, they've been in an accelerator and those were their advisors, but they will not really be engaged beyond that stage because they have a new cohort coming in. I like how they separate medical scientific advisors separate. Okay, moving on, there's the ask, again, beautifully presented. That's what I mentioned about the pie chart. So they combine the ask and the use of funds. They're raising 2 seed, 300 friends and family paid in. Again, they're articulating milestones achieved with that revenue. Again, great, they got post revenue with that much money and the working prototype. And they also say that 100% of that was from founders. Again, that's very important to investors. And that combination is very appealing. I'm kind of maybe losing this just because it's hard to present everything. So I'm using 15 million non-dilutive, 5 million Series A raise. I'm assuming that that's something that they want to. So I'm not sure. That one I'm not giving them any marks for. I'm not sure how to interpret. Again, if I looked at it longer, it probably might have been better. Again, the judges go very fast. So the easier you make it, the better. Comparables and exits. I love that they did exit pre and post revenue. Again, that tells me, remember we talked about the fixer-upper versus the mansion in your neighborhood? That's what it tells me. The pre-revenue, right, is that's the fixer-upper, right? It's going for 18 million. Great. And they're like right there. So now, we're going to help them with that raise get further down that arrow, and they're going to be moving into this territory. Again, beautifully presented. Okay, assume that is the closing slide. Usually you want to do a summary just to remind the judge or the investor what are the best points on why they should invest. Before we move on to the next deck, any questions on that one or comments? Nope.
I think it was a very moving deck. I think the point that I just don't see is the clinical validation of the stem cell therapy for orthopedics. It wasn't really clear to me.
Yeah, and I think remember where I mentioned
there was one slide that had the publications, and
I think that's where
right below that.
And again, that was very hard to interpret, and I would assume that in the presentation, that's where they might have gone into that.
And it wasn't clear if this was just for orthopedics or the broader market that they started talking about.
Yep. Any other comments or anything you want me to go back to if you want to take a second look? Okay, so let me stop sharing this one. Let me bring up the next slide. We're going to go quickly because we only have 5 minutes, but I do want to show this one. Okay, so transforming ocular therapeutics. Not a great tagline. Don't really know. It's just the mission statement. Transforming ocular therapeutic, founded, business segment, lead indications, unique position. It's actually not bad, especially for a written deck. That just gives you, it's almost like the mini executive summary, right? So I'm forgiving them being the vagueness of this one when I move on to this slide. So let's see, unique position overcomes poor bioavailability and tolerability of current products. First and only water-free. Okay, so that's a good summary. First and only water-free drug delivery technology. Okay, so here's where they lose me a little bit. I don't see the problem first. Right? So residual time on the eye, it jumps into the product sale. That's not how you want to do it. So did they talk about this is the only thing I have as an indication, right? Overcomes poor bioavailability and tolerability. That's all I have to go by. That's not enough for me. Again, try not to be a product pitch, be an investor pitch. So the global market is rapidly expanding, unmet medical needs. I'm not clear. It really is. I see the market. Today, 2024, okay, that's fine. Innovation drives growth. I'm not sure what that does for me. Diagnosed, 2 million treated. First in class, best in class. This is hard to read. As a deck that would be evaluated on read only, that's a little tough. And I don't have a clear problem. So I'm trying to match them to something. They're first in class for evaporative water layer. Okay. Addressing two specific subclasses. They're diving into too much detail. At this point, I'm losing context. Sales assumptions. Okay. Key assumptions driving sales growth. So giving them marks for that, right? They kind of rolled their go-to-market into the slide, but at least they're articulating it. Out licensed to leading commercial company after readouts. Launch date, okay, I see peak sales achieved after 7 years. That's a good number to put in. And again, they chose to do 7 years because of the ramp up. Clinical pipeline. I prefer seeing clinical pipeline later because and usually after, well, they did put it after the financials. That I take it back. That is actually a correct way to do it because they already told me about their financials. So I know that the pipeline is not included in the financials. That's just purely future pipeline. Competitive strength, strong IP, 90 granted and allowed patents through. Okay. Freedom to operate. Okay. Not sure what the main claims are around, but again, is it bioavailability? Is it tolerance? What is it the IP around? I would have liked to get more color. Business strategy. So here's where I'm getting a little annoyed because I'm getting business strategy and go to market after the financials. So now I kind of have to go back. I need to look at their go to market strategy and then see, well, does that make sense? Licensed to leading company. So now does that match? Establish strategic partnership for commercialization. So again, it's just the flow is very not friendly. Investing the cash flows for commercialization partnership into follow-up programs to further leverage. That's not a go-to-market strategy. That's your operational strategy. Okay. Go-to-market is really who will take you to market. And they're saying it's a strategic partnership for commercialization. Well, are they going to be distributing? Here, they actually did a better job. I'm sorry, here. They said out licensed to leading commercial company. That's a better way to articulate it than this. This is a very poor go-to-market strategy slide. This is a little bit of an ouch. That's way too busy. I have to match their names to pictures to text, so I'm not happy. For whatever reason, the ask is missing. I don't have an ask. I don't have milestones. I don't have much of anything. And again, that's a real company that presented. So so here you have it. So we looked at one good example and one example that is bad. So, but if the company tells you, look, we raised money with this deck, again, good for them. But it is a lottery. We don't have the benefit of them having the pitch, the verbal pitch. But I'd say the deck is very poor, the second one.